Alrighty, traders. Alrighty. I think we are. Yes, we are. We are live. Why is this? This is really weird. Normally I can see the amount of views that are coming through, but I can't on the other screen. Oh,
Start your day right with Hungry Jack.
Easy. Oh, there we go. Alrighty, so in this video, guys, or in this session today, I want to help you. I'm going to teach you guys a bit of a trading technique. Why can't I? Normally, I can see the views on my screen here. Oh. Yeah, normally I can see that. That's crazy. I think we're about to see the beginning event of the end. Hey, Frank. All right, guys. So in today's session, I'm going to be teaching you. I'm going to be teaching you one trading technique or one chart reading technique that's going to help you understand the markets a bit more, about how the markets work and how the markets flow, and and all that sort of stuff as well too. So let me actually get into this right now, and let me actually do this here. So firstly, before I do start, guys, let me start off with obviously the typical disclaimer as well too. Guys, do not place a trade based on what you see in this session today, because trading is risky and it can cause substantial financial loss. There is no guarantees of making money in the market. And it does take you a while to become a really good trader. So be smart about the way that you're trading these markets. Also, for you guys that haven't done so yet, guys, what I want you to do is I want you to make sure you head on down to John's Flash Sale, JOHNS, flashsale.com. And you're going to be getting, I'm giving away a massive flash sale right now to a trading course. Video 1, top deadly mistakes. Video 2, chart reading boundaries. I give 2 trading systems here: Ultimate Trading System, Blast Off Trading System, number 1, Millionaire Management, and so much more. So I'm giving away a lot of stuff there, and that actually ends today. I've actually left it up for another couple of days, but that actually ends today. So make sure you head on down there, grab that before I take it down. Now, let's actually get straight into it. Now, what I want to talk about, guys, is how to actually read the markets, how to actually read the charts, how the charts work, and so on and so forth, and how these markets are going to really, how they really work, and how they really, some things that you can talk about, or things you can do when looking at these markets. Okay, so one thing I want to share with you, and it's really, sometimes what I'm about to share with you is very clear on the chart. You can see it clearly. And sometimes it's not so clear. Okay, so one thing I want to share, I want to go with you, and I'll walk through the GLD price here, because this actually gives you a much more direction of what I'm about talking. Now, what am I talking about here? The one thing that that I want to share with you, and one thing I want to talk to you about, is how the markets work. Okay, now the market tends to go in 2 different types of phases. All right, now let's actually do this here. Firstly, that the first phase that the market goes in, let me show this here. So there's 2 different types of phases. Okay, there's a price phase, and then there's a time phase. There's a price phase and there's a time phase. So a price phase is when the market's actually having a strong move in a direction. Normally it's with the trend. So we have a nice strong move. This is what's called a price phase, or what I call an energy releasing phase. Okay, so it's energy releasing. It's not building energy, it's releasing energy. And then we go through a period of time where the market might go sideways, or we might have a bit of a pullback through here. This here is called a time phase. This is also called a refueling phase as well too. All right, so that's basically another term for it, another word for it, a refueling. And then we go through another big up bar, and then we start. This here is the start, or potentially the start, of a new price phase. And the energy that we built up here is now being released here. So we go through different types of phases, and especially in a nice trending market, you can see this very, very clearly. We go down, and then we may go sideways for a while, and sometimes the pullback here which is called time phase, it's either small bars or it's very, very volatile, but it's not very, you can tell that we're not moving in a direction. And then we have another move down, and then so on and so forth. So there's two different types of phases there that you can see in the markets there. And actually, I'll just share with you. Actually, no. So let's actually go through. I'll go through the charts right now, and I want to share with you what that's all about when it comes to the charts. So if we're looking at this here, say for example, we're looking at this. Say the GLD. Let's actually, let's bring up the GDX here, because it's much clearer to see this. Okay. So firstly, I'll bring up the actual chart itself. Firstly, what do we see here? We see what? Firstly, we see a move up from there to there. Okay. And then we had a move down. So as you can see, right, like this wasn't really that clear. But as you can see, from here, especially from here to here, we had a move up. This is what's called a price phase. And the price phase is generally in line with the underlying direction of the trend. So we have a price phase. And then we have a pullback, which is against the trend. So you can see the trend is definitely going up. But then we have a pullback, which is against the trend. And then guess what happens? Why is that? There we go. It's a click on the wrong button. So then we have a pullback, which is known as a price phase. So this one here is this is a price phase, and this is a time phase. This is using a lot of energy. This is building energy. And then we had this gap up, and this is now going through this is now another price phase, and now we're going through another time phase. Now, why is this important to you? Because if you are looking at how the markets work, right? What do? They stair step, don't they? They stair step up. And if you're looking at the markets and you're trading the markets, you've got to ask yourself, what phase is this particular market in right now? And it's like whatever chart you're looking at. If you're looking at a 2-minute chart, well, that obviously has different price, different phases. You're looking at a daily chart and so on and so forth. It's obviously, it's relevant to the chart you're looking at. So you say, okay, what phase are we looking at right now? So if you look at what we're looking at right now on this chart here, you can see how that we're just in another time phase, which is just going sideways. We're not getting a strong move, but it's just going sideways. So that's basically what we're seeing through there in the markets. And so that's basically what we're seeing in the markets there. And we're getting this little bit of a pullback through here, and that's basically what's happening right now. So we're going through this time phase. So this is also known as, if you're trying to trade this phase here, it's very, very unpredictable and very, very volatile, as you can see, right? We have a move up, and it was pretty volatile, but we had a nice move up and then a move down, a nice move up and a move down. If we look at, say, the GDXJ, we'll be able to see the same thing too, right? We had this nice strong move up, which is a price phase or an energy releasing phase. And then we had a pullback, didn't we? What is that? That's also a time phase. Then we had a nice run up, which is known as a price phase. And now we're just having a small little pullback. Right now, as we speak, we're still in that time phase. Now, sometimes when the market has price and time need to be balanced. All right. This is so critical. And what I'm about to share with you has been a result of some of the most successful trades that I've done in my entire trading career. Price and time need to be balanced. Now, what do I mean by that? Put it this way. So let me actually, I'll bring up my Snagit tool again here for a minute. Price and time need to be balanced. So for example, if the market goes for, and you can see this with any market here, okay? If the market goes for a big run down on the downside, all right, so let's go through here. So the market has a big run on the downside as an example. This has done what? This has now done a lot of price, right? We've just done so much price. Remember, price and time need to be balanced. So what are we? So because we had a lot of price, we now need a lot of time for that time and price to be balanced and to go forward. So then we would need something, we would need something like this to happen, or we would need something like this to happen to equal pretty much what we see on this downside through here. So this down movement through here, we have a pullback through here, or we have a sideways movement through here as well. So, and this pullback through here is known as time, which is known as time. So whenever you get a big drop in a market and you see things, you see this actually happened with, say, for example, oil. You'll see this with oil, right? Look what happened here. We had this big drop down, didn't we? Big drop down. So you know, right? You know, if you're looking at oil, you know that after this big drop down, we are now likely to go through a significant amount of time sideways or a nice pullback. Because why? Because we already had, see this big long move down. Now we're just going through what are we going through right now? We're going through a time phase. It's not a change in direction. It's a time phase. What is a time phase? It's a resting, it's a pullback, it's refueling to go for another run. And because we had from here to here, because we actually had a big run on the downside, which is we used literally a lot of fuel. Think about it as a fuel tank. We used a lot of fuel in the fuel tank. Now we need to spend a lot of time refueling before we actually go for another run. And so that's what happens. And so now we're getting that. This is the exact same thing with a lot of markets that do this. That happens. Now, depending on the volatility of the move, if you use, think about the market as an energy source. Okay, and let me actually bring, oh, where'd that go? Oh, there it is there. Cool. All right. So if you think about this as energy source, if the market, has a big drop down really quickly, then it's likely to snap back really quickly. All right. So what I mean by that is that you can see if this market, like for example, natural gas, right? If something goes up really quickly like that, vertical spike, it's used all its energy really quickly, and that tends to happen, or vice versa. So that's price and time need to be balanced, and that's how the markets work. Now, this what I'm about to share with you has resulted in some of my most successful trades in my entire trading career. And that's understanding, once again, price and time. Now, remember, what is time? Time's either a pullback or a sideways movement in the market. So let's just say, for example, we had a market that ran up through here. Okay, let's just call this the price phase. All right, let's call this the price phase. So we had a big run up through here, which is called the price phase. And then guess what? And then suddenly we actually went through a period of sideways movement. But the sideways movement looked like that overall, right? It just went sideways. This is now known as a time phase. So if you look at this here, right, we saw this is the price, which we used some fuel, and then we went through a time, and we actually built up a lot of fuel, didn't we? So remember, price and time need to be balanced. And because price and time need to be balanced in the markets, guess what has to catch up? Price. And what tends to happen, that's when you start to get a nice strong move coming out of the markets through here. All right, a big, nice, strong move. And this was the number one reason. Oh, sorry, not the number one reason. This was a big reason why I actually shorted Bitcoin when I did. Let me actually share with you what I'm talking about here. Let me see if I can bring up the actual Bitcoin chart now, and I'll share this with you. Let me actually. There was AGYS. There was an actual trade that I did on AGYS actually last year, and I'll share with you. It was another example of this, right? So look at this here. Look at this here. So for example, you can see now, I'm not telling you to go place a trade based on what I'm telling you here. You still need to have a setup and an entry signal. But look at this here, right? If you look at this chart, if I'm looking at this chart right now and I'm looking at AGYS, all right, look at this chart back here. What do we have? We had this from here to here, which is known as what? Which is known as price, right? It's known as a price move. So it's known as a price move, but then look what happened through here. Look at all this here. If I went from there to there, look at all that sideways movement. Sideways, small bars, not much going on. A lot of what? A lot of fuel being built. Then guess what happened? We got a nice breakout, Nice breakout, big solid green candle, breaking above now after all this sideways movement. This now tells, and I actually traded this now said to me, because we have a lot of fuel, because we went sideways for a long time, the market generated a lot of fuel. Now we have the potential to go for a nice run in the markets because what? Because we had a lot of fuel. And then it ran on for about a month or so from that there. A beautiful, really successful trade. So I knew in the back of my mind, as soon as this broke out and it had had a good increase in volume, I had my setup as well too, that this now has the makings, the foundations of it going for a nice run in the markets. And that's basically what I did. Let me go share with you another example of what I did, and you'll be able to see this. Actually, you know what? Let me actually share with you another example here, say on gold, because gold was another great example of that. Look at this here. All right. So if we go back in time with gold, look at this here. From here, let me actually I'm just taking the screenshot where it is right now. Look at this here. What did we have? We had this sideways movement, didn't we? We all had all this entire sideways movement from there to there. So what is that? That's basically time, right? See how it's going sideways? We had a breakdown. We had a nice pullback. And then notice how we did break down, then went pulled back for a while, and then we had a nice run. Now, why did we go for a nice run? Why? Because we had a lot of time, which is known as fuel, built up into the markets. And now once we broke out, came back down, and then we started to slowly step down. Now, depending on when you get this move, depending on how volatile the move is, sometimes you can get a really big spike like that, like a really big spike or spike up. And that happens really, really, really quickly. Or you might get a slow move, but it happens over a period of a few, say a few months, like gold did. And that's exactly what happened with natural gas. People don't understand this with natural gas. Let me go back to UNV. Why did oh, there we go there, all right? So why did natural gas go for a massive, massive run? Well, let's have a look at this here. What is this entire thing through? Look at this here. Look at all that. Look, oh, I've got the whole thing drawn up already, as you can see, right? Look at this here. Look at all that. Look at all that sideways movement. And then we had a nice run up, a nice gap, and then boom. See the energy release? Now, if the energy releasing on the move, is vertical, like it spikes up really quickly, then it's likely to come down really quickly. But if it goes up slowly, then we're likely to see a few months out of that. If it goes up really, really quickly, then we're likely to see maybe a week or so out of it. Sometimes a bit shorter, depending on the volatility. So you can see here what I'm talking about. Again, let me go back to, I'll bring up the Bitcoin. So I can bring up so many examples, guys, of this. And it's understanding this one foundation of how the markets work. Now, again, guys, I'm not telling you to just get in anything when you see this thing, right? You still need to have your entries and your stops in place and your risk managements and all that sort of stuff. But by utilizing this, you can start to generate sometimes a significant return on your investment, especially when it really starts to take off. So let me go and share with you the Bitcoin, and I'll share with you the reason why I shorted Bitcoin late last year, and using this in one same exact example of what I'm talking about here. So if I bring up my Bitcoin chart here, I haven't actually got my trading platform, so I'm just going to use investing.com to look at Bitcoin. If I go to my daily chart, right, look at this back here. If I go to my daily chart and I bring this over here, look at this here, guys. Look at all this. If we go from here, look at all that sideways movement. What is that? That is time, isn't it? Time. And then guess what? Then I actually had, then we had what? Then we actually had time, didn't we? Now, let me take a screenshot of this so I can actually draw on this to share with you what I'm trying to share with you. Look at this here. Look at all that sideways movement on Bitcoin. Then once we got the breakout bar, firstly, that was actually an entry signal from my actual trading platform. Oh, sorry, no, from my trading system to say, go short. So I went short, and I knew that this wasn't going to be a 1 or 2 day or one bar or 2 or 3 bar, because sometimes I do get into trades and there's only short term. I'm expecting that. But I knew, because we had all this time going sideways and then the breakout, I knew we're going to go for a nice, decent run. And that's what I did. I entered here and I exited down here. And I just managed my stop by moving in my stop down. And that's when I got stacked, when I got tagged out. So that's basically, and as you can see, right, guys, like once you start to understand this stuff about the markets, once you understand this stuff about the markets, guys, you can start to really get a good grasp of, there's so much information from the chart itself that you can really grasp. Okay, where are we right now? Price and time, price and time. Remember, price and time need to be balanced. If we have a lot of sideways movement, I've seen this so many times. This is also called what? The calm before the storm, or from here. And I see this so many times. And when I see a setup like this happening with Bitcoin, so if you guys are watching my stuff last year, and I was saying Bitcoin's like a drop, we like to go for another big run on Bitcoin. If we break to the down, I was saying if we break to the downside, we're likely to go for a big drop. And it's not that I'm smart. I just could see this time here building, and especially when we're getting all these small candles and then a big breakdown candle, I shorted that straight away. As soon as we got the breakout candle, it told me. Now I still had to go and check all my trading rules, right? I have about 4 or 5 trading rules that I follow. I need to make sure it met my trading rules, but because it did, I shorted it. And we made a really good amount of money. This was a very, very successful trade. Very successful trade for me. I think it generated I think it was 1.5 to 2 times my risk on the trade. It was actually quite phenomenal. But anyway, guys, that's what I wanted to share with you today. There's so much information, and when you start to notice these setups, if you start to notice these setups and you start to notice what's happening in the markets, you can really do well in the markets. And this is the foundation. This is the foundation to. And this is one of the things that I look at to say, okay, has this got the makings of going for a nice run? Meaning, can I hold on to this for quite some time? Or is this trade right now probably only going to be maybe a couple of day trade if I'm trading, say, a daily chart example, or a couple of bars? Same thing. If I'm looking at, say, a 2-minute chart or a 5-minute chart or 15-minute chart, I'm looking at the exact same thing. When the market goes really, really, really quiet and then we get a big breakout, that's what's called the calm before the storm. But in using it as in trading terms, it's called price and time. Time is when we're generating, we're refueling, and then we have a lot to fuel. We're ready to go for another big move. And that's how and like right now what's happening with Bitcoin. Bitcoin right now is not really doing much, is it? It's not really going sideways, but just there's not really much going on there. So it's not like this happens all the time, but you can start to see this happening time and time and time again, and then you can start to generate some really, really, really nice moves out of it. MASI was a trade that I took late last week. Late last year. But look at this here. Actually, yeah, it was late last year. So look at this here, guys. Look at this. So we had this big run up through here, didn't we? See, notice move from up here to here. Now, when this move happened, what was actually happening at that time? Pretty much nothing, right? Pretty much absolutely nothing. So I looked at this stock here, and I went, okay. When I was watching this stock, I went, okay, firstly, what do we have? We have this entire pretty much sideways movement, don't we? What is this? This is time, isn't it? Time is what? Time is refueling, generating a lot of fuel. And then when I saw we actually had this move up, and then we had this sideways movement, and then we had this, see that big breakout candle breaking above this entire sideways movement? I knew that this trade that I took had the makings to go for a decent run. Okay, go for a decent run. Now, I didn't know how long it was going to take, but as you can see, right, I knew that this was going to be a nice, significant trade. And depending on if it spikes up really, really quickly, it's probably only going to be only going to be maybe one or two maybe a few weeks or so in the markets, or it might even be a week, just like natural gas. But then guess what? But as you can see, right, it slowly went up. So if it's slowly going up, what does that mean? It's probably going to go up for a few weeks, maybe to a month, if you're trading, say, a daily chart. And then as you can see, this thing ran up quite some time. Now you never know how long the move's going to be, But you can just see this time and time and time again. I'll give you another example, guys. Like, once you start to understand this stuff, when you start to see this, like I saw this with Apple just recently, late last year. Look at Apple. What is this here? From here to here, we had a move up, didn't we? From there to there, we had a move up. So that's what? That's called price. But look at all this sideways movement through here. See all that sideways movement? Notice how we actually had a lot more sideways movement than we had this up movement through here. This is called price. This is called time. Time is refueling. So then when we got a breakout, I knew that, hey, we actually had all this time built up. Plus I had a few other things going for it, like the moving average and so on and so forth, but we had all this time built up. As soon as we got the breakout, I knew that we could actually go for at least a few weeks movement out of this, because time said we're likely to go for a nice move. So if we have an over imbalance in time compared to price, then remember, if we have too much time, price needs to catch up, just like Bitcoin did, and so on and so forth, and and like other charts. So that's basically what I wanted to share with you today, guys. And I hope that you enjoyed today's training. If you have any questions, guys, leave them in the chat box. If you guys haven't done yet, guys, make sure you go down to mastertraderlab.com, and grab your free trial to the membership. And I'll answer some questions for you guys right now. So let me just put it there. I think we're about, okay, cool. Got me some GBTC and Hive today. Cool, King. Hard not to look for a higher low here, honestly. We have already started the beginning of the end. Fed is kicking the can down the road. As long as, Michael, all I say, man, is that it sounds like you regurgitate. You're basically spitting out what other people are saying. They've been saying that for years, Michael. Seriously, just focus on the charts, man. Focus on the charts. First things first. There will be no higher low, just lower highs and lower highs. Well, Michael, my man, that's what you think. Whatever the market's doing right now, that's all you can make a decision on. Because you have no idea what's going to happen tomorrow or next week. Who knows? Right? So whatever's happening right now, make your decision on that. Don't ever try to think that you know what's going to happen. It's inevitable. I agree, but it takes more time than we suspect. Yeah, but you know what? If you try to short the market and say, well, I definitely know this market's going to crash, and so I'm going to short this market or whatever, or I'm going to buy this market or whatever, and you know it's going to crash. Guess what? Sometimes we could go for another big run in the Dow Jones again. That can happen. Maybe we could start to make an ABC, make a higher low. Okay. We will be 6 months in before we call it October this year. Okay. What does the weekly chart say? Real, what I was teaching you today was just a charting technique. I am teaching you a charting technique, and what I mean by that is that I'm teaching you a charting technique. So if you look at a weekly chart, if it happens on a weekly chart, well then it happens on a weekly chart. If you're looking at a 2-minute chart, and so on and so forth. So remember, guys, every single time frame you look at, if you look at a 2-minute chart, a 5-minute chart, or a daily chart on the Forex market, and then you look at a 2-minute chart, a 5-minute chart, a 50-minute chart, a daily chart on the stock market, they're the exact same thing. It's just the chart. A chart is a chart is a chart. Good day, John. Hey, Bernard. The S&P fell within 2 points of your trend line change today, rallied up. I was really thinking that the market would give us a clear new trend today. Well, momentum. No, it hasn't. It hasn't actually done that yet on the Dow Jones. Pretty much a nothing day today on the Dow Jones. Can we run down after market sideways, or will it release higher? Wait for the market to tell you. Don't try and predict it. Can you please analyze the S&P 500? Well, there's really nothing to analyze in the S&P 500. It opened, it actually gapped down, and then it came up and closed higher. So we're still stuck in this. There's no real clear. There's nothing to analyze. It's same as yesterday. If you see my session. You are fantastic, John. What do we got here? You are fantastic, John. If I were a girl, I think I would ask you to marry me. Okay. I appreciate that, man. I like that. I'm gonna keep that. How much leverage? How much do you leverage your positions, John? Ricky, that's actually. I'm not going to get into my position sizes, leverage, and so on and so forth. That's all irrelevant compared to the individual trader. I'm really confident in my trading system because I know my A+ setups 90% of the time is going to generate a nice profit. So therefore, I'm happy risking what I'm happy risking on the markets and all that sort of stuff from there. So it all comes back down to, you know, if you're not very confident in your system, then it's whether I tell you, you know, yeah. So I'm not going to really get into leverages and my position sizes and how much risk and so on and so forth. Because the fact of the matter is that if you knew without a doubt 9 times out of 10 you're going to generate a really nice profit, then in the times that it doesn't work, you're going to have a small loss. You'd be very happy to have a bit more risk. What about all the time on Apple build around 225? Apple 225. Yeah, well that was another time phase. So then we went through a price phase, a time phase, and we went through another price, easy. Then we went through another price phase, and then we went through another time phase. And then after the time phase happened, right, then we started we started the breakdown. And then we've actually now had what? Now we've actually had, what do we have? We've had too much price now. So what's happening right now? Time is just catching up. That's all. Can you look at the DAX and the Nikkei? I feel like they are leading. Thanks. I can't do that on this software here. So yeah, I can't. On my other software, my futures and Forex platform, I can do that. Alrighty, guys. Well, that's it for me today. Have an amazing weekend ahead. And I hope this session has really helped you out. Go kick some goals, guys, and have an amazing weekend. And I'll see you next week.